Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday, July the 2nd, the year's 2021. Let's talk trading. Weekly wrap up and NFP day today. Remember, these videos are for educational purposes only. Your results may differ from mine. So let's just take a look, see what the week looks like. First off, all the weekly gaps have filled. You can see for the week we definitely broke through the previous week's low, then we came back up. But for the week, we're down from the open 42 pips, 105 pips off of the low, 103 pips off of the high. You can see yesterday we put in a monthly range and we exceeded the range on both ends. So today is an outside bar. And it looks like we're 11 pips above the monthly open. Very interesting day today. We came really close to the yearly open. We had a low at 37.31, so we were only 30 pips off that yearly low. Or I'm sorry, yearly open, or 273.74 pips off the yearly low. Once again, outside bar, no inside bar since 18 days ago on the pound. Nice range on NFP day, 113 pips. I've seen bigger, but 113 is nothing to sneeze at. Very interesting price action, as we'll see. You can see we took out the pivot. And we mainly triggered to the upside. There was a couple triggers to the downside. Handful of pips to be had. But the main thrust was to the upside after the NFP open. Rats. Remember, at this point, the zone wasn't large enough, but with NFP trading off of that low, once again, we're looking at a 15-minute chart, but you can see how price was leaving those bottom wicks and just shot up. So you see price leaving the bottom wicks to the upside. What do? You trade what you see, you go long. Not rocket science. And one of my favorite levels on the pound is in the 40 area. I call that the launch pad, and you can see right here the launch pad paid off. And you can see we went to the next launch pad. One thing I've noticed about the launch pad is it seems to go from 40 to 60. It's almost, if you see price go down past the 40, when it comes back up to the 40, you can go long and then just put your TP on at 60. But remember, your results may be different from mine. As far as the trading plan on the pivots, once again, we took out that pivot. It said price near S1, bias is long. Price got near S1 and took off. The pivots. So we had 2 missed pivots in the month of June. Now we have July. So far, no missed pivots. On the weekly, remember, there was this missed pivot right here. Well, look what happened this week. We took it out. So no missed pivots this year. Once again, when you see those weekly missed pivots, you can start to aim for them. So you see we still have a couple of missed pivots here from this year. I don't know if we're going back down to 124 or 130, but once you start to see price heading that direction, just think that it's a possibility. That's all we can do is talk about possibilities. the wick zone, once again, price gets in the wick zone, doesn't like staying in it, has to leave it, and it did big time today. Now we just went through that upper wick zone. We're almost sitting on the edge of it. The weekly range, 208 pips, just 7 pips less than last week's. Still under the weekly average here over the last 100 weeks. We didn't break out of the high, but we did break out of the low. Once again, high minus close, close minus low. Playing those weekly rat zones would have paid off nicely in both directions. But if you're a rat, you're either a red rat or a green rat. You're definitely not a Yale student, right? And if we move over, take a quick peek at the month, you can see only 113 pips at 0 percentile. We've got a lot more range to move. You can see we've got that monthly pivot here, 139.53 to target. Have nowhere near the previous month's high, and we've already broken out of the previous month's low. Right now, high minus the close is just 7 pips. Close minus the lows, 105. So this month already is proven that there's been enough movement to make some nice pips. Trading those horizontal lines, the rat zone, buy zone, wick zone. And right here, you're looking at the wall mall lines. Today, NFP day is just one of those where you see it, you take it. You see price cross below the 40 here during the release of NFP. Real simple. Take your money off the table. Came screaming through the 40. Once again, that's my launch pad. And you see that was just during that hour, it was worth 40 pips. You can take your 40 pips and almost go home, right? Then you see price came back down to the daily open. Buyers pushed it up. And you can see we're 76 pips away from that open. Magenta, that was an outside bar. This aqua, that was an inside bar. Taking the break of the inside bar, previous high on the H1, once again, paid off. And as you can see, when you get this type of movement and you start moving your stop loss up, there's almost no threat to it. I mean, we had higher lows, higher highs up until this hour. So somebody was even asking about the inside bar trade. I don't know if they were, I think they were calling it the Strat or something. I don't know where they got that name from. Not really sure, but once again, H1 inside bar, trade the breakout. You can see there was one here. Not so much the outside bar, but I like to look at the inside bars. And these are just simple horizontal line trades. You know, Walmall and I, he said that sometimes people trade things differently. He and I trade things differently. And I don't think it's really so much we trade things differently. It's just we might have different triggers. So, you know, we call it DSR trade basically, you know, trading off a 3-level ZZ ball. So in this case, the 3 ball, where he might wait for a high to break. I might wait for open to break. Well, we're not doing the same trade. We're doing something similar, but it's not the same. We're just looking for different triggers. So sometimes I'll be in quicker than he is. Sometimes he'll be in quicker than me. And he might stack on where I don't. So it's not necessarily the same method. So remember, 3-legged stool, you know, you got your method. Those are pretty much things written in stone, or at least they should be written on paper, and that's what you could hand to anybody, they could follow it. But what makes the difference is the risk money management on the other leg, how you exit the trade basically when you're in a losing position and when you're in a winning position. And the third leg is your brain management, managing your emotions, your fears, your regrets, whether or not you revenge trade, get emotional. That's the leg of the stool that really matters the most. Because most of the methods, if they're statistically based, then you know they have the opportunity, they will give you the opportunity to make money over the long haul. You know, any one particular trade could be a loser, but over the long haul, if you stick with the method and you take every trigger, you should be able to end your session, as we called it, the war, profitably. Now, the hard part is whether or not you get emotional, you get mad, then you don't take the next couple of trades and they would have proven to be winners, then you take a trade and that one makes you a loser, or maybe you're in that trade for hours because it just doesn't go your way, but not enough to trigger your stop, and you're just waiting and waiting. Meanwhile, there's other trades that could have happened, but maybe you've over leveraged yourself so you can't take advantage. So you've just created a mess. That's why you have to have a smart trading plan, money management, risk management, and most of all, have your brain managed. You have to manage that thing so it doesn't get away from you. You know, looking at the higher or lower high triggers, you can see here there was a trigger worth 6 pips, and these happen, you know, a lot during the course of the trading day, especially during the London/New York session. You're going to get these trades if you want them. You can just take them all day. There's nothing really to think about. And once you have that set up, all you have to do is trade it. Now, you might look left. So for example, right here, when it was coming down, you saw you had 3, 4 in a row, puts in a 1 ball. You see it had a hard time breaking this level. You're just looking to the left. You say, you know what? I'm going to take my pips off the table. You see here a retest coming right now. And maybe you want to take that trade, maybe you don't. But the problem is when you're trading, you can see what you want to see. And you will see what you want to see. So you might see this as an opportunity to re-enter, and maybe price will go down, but then price could bounce and go up, and you have a loss. Question is this your trade, or is your trade up here? That's the problem. Because you see, if you got out of this trade and it goes up and then it comes all the way down here and you don't get in it, that's when your brain goes, oh man, I should have done that. So next time you see the same thing, but that's really not your trade because your trade trigger was up here. Your stop loss was never threatened. And you just decided this was a good place to exit. So sit well with that. What happened next doesn't matter. If it comes all the way down to here, and guess what? You'll have a trade opportunity going the other way if you're trading this method. So that's how you can really mess yourself up, by altering your trading method, not sticking to your plan. So, fellow traders, I hope you had a profitable week and a profitable NFP day. It's the July 4th weekend. If you're in the USA or anywhere in the world, I hope you have a really fun and safe weekend. And I hope you guys come back next week. So remember, fellow traders, the next time you sit down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.